Good morning, everyone. It is Friday. We made it through a whole week with this new schedule. This is pretty amazing. I appreciate everybody showing up every day. It's more like catching an airplane every day for me right now. Still adjusting to the new schedule, but I appreciate all the participation. Make sure you subscribe and hit that notification bell so you know when this channel goes live. Anyway, folks, what a day yesterday, huh? When we were doing the live yesterday, we had no idea what was beginning. We were up around 1% plus, but a lot was to happen after that. Those of us in the live room, we saw just an absolutely crazy day. And I have to, everybody's trying to figure out, what is this? Is this the low? What is this? And I think one of the things that I want to discuss today is, this is the scenario I've been talking about, not a one-day 5%, but that we're going to move up to around the 200-day moving average, which we're getting close to. It's around 4040 right now on the S&P, and there's some targets just between 4,000 and 4,100. Didn't know that most of that was going to happen in one session. So it's an interesting scenario. I've told you folks before, I have a history of mentioning numbers and targets, and they just kind of happen sometimes the next day. And so in today's video, this is the end of the week, a couple of things that I want to achieve today. We've got a bid. We did have a bid in the market starting to fade a little bit, but I'll get into the opening here in just a second. But one of the things I want to accomplish today is to kind of summarize what we saw this week technically, try to get it set up for Monday morning, because I'm not going to be there Sunday night. I have to admit, I actually missed the nighttime videos, but this is a much better way to participate in life. Let's just say that. And it's been a really good week. It's been a transitional week for me, as I mentioned. But the point is that what we're seeing in these markets right now is also transitional, and we're starting to see some things unfold. I'll go through the details in a minute, but we had over 6,000 buy signals for this morning. Databases moved up substantially. In the live room, I forget who it was, somebody made a comment that, the database is really going to get blown up today in a good way, and that is what happened. I'll go through some scenarios there because I think there's further implications of what happened yesterday. I do think it was a significant event, and I'll try to break this down the best I can. So let's take a quick look at what's going on right now. S&P's started selling off, and I wish I could have came up because all the algos and everything were suggesting we're going to decline. In fact, it looks like maybe a multi-hour decline. I'll set that up when we go through the algos. We're going to go through market grid and some other things here as we get set up coming into the opening bell. And it's very interesting. I also want to kind of shout out to all the veterans. It's Veterans Day. Appreciate everything you do. My dad was a World War II vet. Appreciate America and everything that we have here. And so, and that also means there's no banks, there's no treasury market right when we need it the most. We really need to see that reaction. Our yield's going to stay down. I mean, we're at 383 overnight is on the 10-year. So our yield's really, is that a real print, or is that just a panic print that we saw yesterday? And I will say this, I think a lot of what we saw yesterday was short covering, but it doesn't, I always have argued for years, I don't care if it's short covering, new buying, it doesn't matter. It's just more buyers than sellers. They're very aggressive, and it moves markets. And I think what we saw, when you see big markets like yesterday, I do need to say this, that's not a big day for the traders, derivatives, you name it. It was a wipeout day. A lot of people got hurt yesterday, really, really bad. And I used to talk about this, especially on like the trading floors. I spent a lot of my years in option and futures trading floors, and big days like yesterday. It always makes me sad. I don't because I know some folks really got wiped yesterday. And then you throw the crypto thing and the FTX and everything that's going around in this environment. It's a pretty tough. A lot of lessons are being learned. I remember a couple years ago when this channel took off and the pandemic was on, everybody thought that this game was easy. And I kept telling them, said, no, slow down. I had some guy that managed to get a hold of me, and I talked to him. He was a sports bettor. He goes, this is way easier in sports. I go, you might want to hang around a little bit. You're going to find out this is not an easy game. You better stick to sports. That's a better deal. So this, like I said, matter of fact, this pre-market rally, we traded up to 39.97 on the S&P. We're now printing 69.50, up 8.50 on the day. So a lot of this enthusiasm has already started to move back a little bit. So interesting. And this is what the algos are telling us. Let's go ahead, and what I want to do is we'll come up and let's bring up, let me go to another screen here. And let's take a look at the expectations for the market grid today. Let me bring that on screen for you. So this is E-minis expectation here. We've got a 97 print. R1 was 91, 39.92. R2 is 40.27. That puts us up into some of these target ranges. Also gets us close to the 200-day moving average right now is at I'll get this right, 40.94. So it's still coming down. So it's ways up closer to 4,100. But we look at the range today. I'm going probably extreme S1, R1, probably stay in that range. I think things will calm down a little bit. Typically, we don't get these big days, but if we take out S1, then 38.95, we're going to print back under 39 handle. I don't see that happening at the moment, but I'll show you the when we get after the market open, I'll go through the algos, and they are suggesting we're going to have some downside. They're still pressing this thing down, only up 650 now on the S&P. NASDAQ's negative by 14 handles, and the RTY is still kind of hanging in there. So let's go to the NASDAQ here, and expectations here. Kind of interesting. I have the models running, and we got a model buy on NASDAQ, which is interesting. That's about a 30, 40-day hold. So there are some things going on, but the PPMs are all clicking down here. But the expectations for the S1 is 513. We had a low of 616. That's 11,616. So S1, R1 is 751. We've been 777 on the high. So we're in between R1, R2 on the NASDAQ, but look for probably the highs may be in for the session, but like I said, my expectation is a little lower volatility, obviously, than we had yesterday. Possibility of just trading down to S1. We take S1 out on all these indexes, then S2 is the next number, 11,380. It could start to be a fairly negative day and maybe retracing. It would make sense that we would have a retracement day. And today I'm also going to go through some longer term ideas. And when I go through all of the technicals, I'll be setting up what's key levels for the close for today, since it's a Friday close for those weekly charts. So let's go finally to RTY. RTY is at looking 91 high, so 1887 is R1. I think, like I said, we may have printed the highs here already. We're starting to stabilize a little bit on the S&P futures as we come into the open, but we'll see exactly what kind of volatility we get on the opening bell. And then S1, 1853, low 69. So look for the lows to expand on all of these. That's what the algos are saying, and we'll go from there. So we've got we've got all that set up right there. Let's go back to the main screen and just talk to you about a couple other things. I am going to do basically a overview of the economy. I want to look at the CPI numbers. The title of this video for today, and we'll call it the theme of the live stream, is really has CPI really peaked? And I'm gonna challenge some of this in a little bit here. But I think actually, I'll just kind of break this down a little bit. We got about 2.5 minutes to go here. I think, like I said, a lot of this was short covering yesterday. I think we saw that bearish sentiment that was hanging around weeks ago, that everybody was covering up those trades. And like I said, it was not what was driving the market yesterday, was not, a bullish sentiment, as the newsline said. It was really people trying to unwind. There were a lot of big trades out there, obviously. And I've talked a lot about this. There's a new configuration. We have a new segment of the markets I don't think that we've had before, going back to as far as I can remember, and I can remember a long time. I started in the markets in 1979. I started on Chicago Board of Trade. So I've been around a few years, and I think we have a new segment in the markets. There's just a lot of retail folks that didn't used to exist. A lot of this has to do with fractional shares, getting more access to the markets, everything from Robinhoods and Webull and all the secondary markets, broker dealers that are out there have brought in a lot of people into the market that didn't used to be. So we have a much bigger constituency from the standpoint of retail, and everything's just gotten bigger. The planet's gotten bigger, the financial markets have gotten bigger, debt's gotten bigger, and it's obvious when we get these, I call them stampede markets, and you can't stop a stampede. And there was wave after wave that kept coming yesterday. It was incredibly interesting, and the fact that we were printing at the highs when the market was closing was even more impressive yesterday, especially where there was no profit taking, none of that stuff. There was just a steady bid right in and continuing into this morning. So we're about to do the opening bell here. We're up 9 handles, so let's hang around and wait for the bell to ring. There it goes. I knew we were close. I don't have a second hand, but yes, here it is, and market's open. Let's we're going to go over, I'm going to switch over to a different chart real quick here. And we're looking at some of this stuff that's here. We sold off pretty steadily coming into this this pattern here.
Order filled.
So what we're going to do here is look at what's setting up here. We're starting to see that volume increase that I talk about every morning. We're a little bit of selling coming in here, and we're going to. My expectation is, like I said, I'm going to go through the algos. We're going to watch this for a couple of minutes just to see if we get any stabilization here. We were in, this is a classic pattern here, folks, where the market was in what's called a rope formation, and this is very strong. This is the Wavetech webs here, and what they're doing is showing the strength of this flow. And when you start to get this broadening, it looks like there may be another leg down here, and so we're printing things down, continue to go down here. We're only at 475. Like I said, NASDAQ's already went negative, so we'll continue to hang here. You can see the big spike in volume. Yesterday, we couldn't take out the spike in volume because it was so huge off of the CPI news that it was impossible. This is actually just a volume rate of change indicator down in the bottom. It shows the differentials on how fast the volume's changing here. So we're starting to get some stabilization right in this range here right now. So let's go ahead and we'll go over to the algos and set up some things over there. I think will be interesting to look at. So this is the hourly chart for the S&P. We'll go through all of this stuff. Let me get off screen here. We're starting to roll over through the 10-period moving average. The algos, this is what they're forecasting for the actually 10-period moving average. This 1 hour chart is going to roll over, and we're probably going to come up somewhere up into that lower range that I talked about. Maybe hitting, we could hit S2 if things start to get out of control. There's going to be a lot of pressure here, but you can see all the algos are suggesting that at least we're going to come down into this range here, which would be 39.30. The 21 period, 40 period moving average right now is at the 85 level, and that's coming up about 5 handles per hour. So that's going to be up here into that low 90s. If we do print down, we should see some stabilization. If you recall yesterday when we were on, it was suggesting that we should be able to, we were trading around 39 handle. I said 38.80, 38.75. We were trading right there. That was the low of that move, and then the rest is history, as they say. And we saw that big move up. Let's take a look at NASDAQ here and just get through all the algos here real quick. NASDAQ's got more weakness. Forecasting, like I said, we're looking at least 2 to 3 hours with negative trends. The moving averages are going to roll over here on the hourly chart. Those of you that have the indicators, just watch to see if these algos change as we get some real-time data coming in. But we're now seeing some pretty good movement down here on the NASDAQ right now. We're printing down to 602. I forget the number on the S1 number, but we're definitely getting close to that as we speak. But everything looks like that's going to be what happens here. We'll just take a quick look at the Russell's not quite as weak. We're hanging right around the 21. In fact, this is interesting. It looks like the Russell is going to be able to have a lot more relative strength than the other two indexes. So look, right now the algos are suggesting that we're going to stay stable. We're not going negative on here. So expect the trading range up here on this. And this still has that giant spike that we had yesterday. All these charts are embedded in there. So we're just looking at those patterns right now, just absolutely dominating from yesterday. And it's going to take a while to consolidate and to absorb everything that happened on that big surge yesterday. So just come back up for just a minute. Like I said, I'm going to set up the rest of the show here, and we'll get everything rolling from here. But like I said, algos look like we're still going to have some downside here. We're only up 2 handles now on the S&P, so we're printing them down pretty good here. We're looking at some, I think, some potential backfilling here, and it should make sense. So remember those numbers on the market grid, and those will help you as far as your trading for today. All right, let's go ahead and we'll go through the Wavetech database. There's a fair amount to talk about because this is Friday, and when the markets close today, we're going to run all of our models. So let's go ahead and get into that part of the show. Okay, here's the reveal. We went from 48% to 69.41. A lot of buys this morning. I love these weaker openings. If those of you that are using Wavetech, the buys that you have out there are going to start to get, you're going to get some pretty good fills on a lot of these stocks. But we had 6,341 buy signals, 273 sells. Everything's bullish across the board. And this is kind of a peak rate though. So let's talk about that for a minute. Is what happens in this type of scenario when all of a sudden you get this blast up. The typical holding period for these symbols, I've got it on screen, but it's small. I'll just tell you what it is approximately 39 trading days on average on the optimized model. So we have 2 models that run, and the optimized, which are the best total profit models on every stock, those have about 39, we'll call it 40 days holding period. And those are market days. So we're looking at the better part of 2 months. And guess what? That takes us into year end. I see everything. It's going to be interesting, folks. As you know, I take off the last 2 weeks of every year. It's a thing. It's the only actual. I usually say it's the only actual time I take off. I did take off a couple of weeks when I was in Europe this summer, and so normally I don't do that. But this year, same old. So we'll be on break there. But there also is something from what happens with the database here is we get up to around 68, 72%. That's the norm. That's where the mean goes from the standpoint of where the top end of the database goes, typically around 72, sometimes 78. Over the last couple of years, though, we've seen these things go to 92%. I think the highest was after the pandemic. It went to a plus 6%, all the way to 96, almost 97%. Almost every stock and symbol in our database was long after the pandemic. It started buying on March 23rd of 2020. We started getting monster buys, and we all know the history of the last couple of years. But the point is that it went to extreme at both ends. It went as low as I've ever seen it to as high as I've ever seen it. Now what we've seen in between point A and B is more of a normalization. And a lot of stocks, when you see huge volatility like yesterday, you're going to get this kind of range from the standpoint of the normalcy. It's going to take a while to normalize these these markets. So when you get a big up day, you get some 5% plus days. It takes multiple days to absorb that shift in the markets from all the trends that happen. Everybody has to rethink. Every chart out there looks different. Almost every chart out there looks different. And so now it takes multiple days and sometimes weeks to actually reconcile that to making the next bet or the next trend move. So what we see is, I talk a lot about momentum. As you get a reset, you get this, it's like a half pipe where you put the ball up on one side and you let it roll and it gradually normalizes down at the bottom at some number. Same thing happens here. The reasons why I use the PPMs, the price pressure momentum indicators that I use, that I show you on this show, the reason why I do that, they're not 0 to 100 meters. I don't like RSI or anything that's a 0, 100 stochastics. You can go through the whole list of the 0 to 100 meters because they get up and they get pegged. I want something that measures pure output, pure momentum, and that's how I went back in 1984. That decision was made. RSI and stochastics, all that stuff has been around for a long time, but there's just too many times you're trying to figure out. It throws you into no man's land where the PPMs never do that. We wanted a pure measurement, so that's why we went with that type of measurement. But back to the database. The database has almost there's 60 basic rules and 600 variables that are being considered on every day when these models run. There's over 10 million calculations go on in our database every night. So that's why I have, plus, folks, so you know, this database has been in since 1996 is when it was first developed, and 1998 and beyond. This has been around for a long time. It's what I do on a primary, which is function is portfolio management and understanding these massive shifts and changes in the database. And there's 16,000 symbols in here. So I go through this because this is the setup for what I think we're going to see tonight on tonight's run. The fact that we've gotten up to 69%, the fact that we've spent the last, going back all the way from when we printed 3502, and all the setups and all these different patterns that have been setting up. Most people, you look at the markets through the lenses of these indexes, which are heavily weighted, and they don't really tell the real story of what's going on. And I've been talking to you, and I have been for years now, is showing you exactly what is going on here with the database from the standpoint of when you start to get traction. Now we have 11,000 symbols that are in trend mode. Doesn't mean they're all going to make money, but I would tell you probably about 60+% of them will. So there's been a lot of signals that have come out, literally almost 10,000 symbols in the last couple of weeks and over the last 5 weeks. And a lot of those already have been very profitable because the markets are starting to get underlying traction. So those of you that are new to this channel, you just need to understand that the reason why this database is so important is it's watching so many things. And this is the other point. It's using the same methodology on every symbol. There's only 2 models, and those models have characteristics. And that's what this has been my career. This database here, like I said, 1998 was when this product here was first built. This is an old version. I call it's like Craigslist for the markets. This is just an old database. It works really good. I don't show you a lot. I am going to be bringing in our PortfolioXpert product and showing you some of that. But this has a lot of metrics in it. It's a monster machine. So that's why this is important in understanding when this traction happens. I told you when we got over 42%, we had a sustainable type environment that was going to continue to grind on. So, when you look at, something as thin as the Dow Jones is one thing. You look at the S&P is 500 stocks. That's another thing. This is looking at 16,000 symbols. So right now we have, 20 times the symbols long that's in the total S&P 500. So this is a really direct indication of how at least expectations and probabilities that happen. If you were to dig into software, every one of these symbols, all 16,000 of them, have a probability map and what the expectations are, mean trades, everything. So this is not just I've seen criticisms by a bunch of people who have no idea what this is about, but this is the crux of what I'm doing. Okay, so now little rant there on the database. Now what I want to tell you is this: is the weekly database is the intermediate trends. So the intermediate trends then have this daily database has expectation of about 40 days on average. Now we go to the intermediate. Now we're talking 240 day range of expected holding. Right now that database is, I'll put it on screen, it'll be somewhat small to you, but it's at 19% bullish right now. I think we're probably going to bust over 28%. We're going to get 10, 12, maybe we'll be in the 30 percentile range. What that means is that all of a sudden, right now there's 3,000 symbols. There could be 6,000, 7,000 stocks that are now having expected returns of something, and a lot of them are anywhere from 15 to 35% and bigger over the next 200 days. So what we're seeing now, finally, and I've been waiting for this moment for a while, is that what we're seeing is that the database, if we get the traction, I'll be talking about it on Monday morning, but if we get this traction, it's going to have significant impact on analysis, what's likely to happen year end and beyond. So, everything, everybody knows that at some stage the markets get to an extreme and a bottom. And I've never seen, I'm telling you, I've not had this kind of contact with the public before through the channel and just through Twitter and other elements, but I've never seen anything so negative. I've never seen the market participants at this level be so wrong. It's unbelievable. I remember saying back when we came into earnings season that things are so negative it has to be bullish. And listen, I'm not right now. We'll see what the database shows up. I'm just telling you, at 69%, this thing's not going away. Looks like we're going to have a pretty decent market that goes into December. And what's more important of that is that these short-term signals are leading us into potentially an intermediate signals. So I think I made my point, but I want you to understand what you're going to be hearing from me. I always say I'm data driven. I'm not data driven by some technical analysis on some index. I'm data driven by this database. And when I know this thing, I developed it. I developed all the rules. I developed everything in this software, and it's been running literally $250 billion over the last 2 decades. So I understand it, and that's what most of this stuff is for. When I'm talking like this, is about the expectations and the knowledge that I have of watching the characteristics of this database. And if there were futures on this database, I would never be wrong. I'm just telling you, I understand the characteristics, and I want you folks to understand that we are at a potential turning point. I'm not calling for new highs by year end, not anything like that. I'm just telling you, for the first time this year, 2022, we came into December of last December of 21. We had mass liquidations coming into the end of the year. We have not owned more than 25% of our intermediate database for the entire year. So this is a significant event, and I just want to make that clear because it's been all year. So are we going to get maybe a cycle where we get 200-day positive? I don't know, but I think I'm done. But the database is so important to me, and it's so important to the channel and understanding my analysis that I needed to go on that little rant. So I spent a lot of time on that. So we're going to get through the rest of the stuff. Let's get into the S&P now and just set up this week. So this is the daily chart on the S&P, and we're looking at the coming just shy of this 200. If you look at the algos here, I think this is fairly important. It looks like a couple days of flat. The other thing I didn't mention, but I will now, is we got an RTX sell signal yesterday. Theoretically, we get 1 to 2 days sideways to down. And the projection for those sideways to down is the S1 that I talked to you about earlier. S1 right now is at 39.29. That's typically what will happen after an RTX sell. We go sideways to down a little bit. S1, S2 is about it for the next couple of days. So if you've got these indicators, and you're going to understand, you're going to have all the numbers you need here for the next couple of days coming into Monday. But we should stay sideways, and we could actually extend that. The algos are suggesting 2 to 3 days, probably in a consolidation. We're going to consolidate underneath this 200. How much we pull back, maybe back to the 10-period moving average. I'll try to set this up the best I can when we come in on Monday morning's opening. But the algos are suggesting that we're going to stall. What's happening on PPM3, though, is we are seeing some significant increase. And all that is that the 40-day moving average is going to start to turn up and start to get to potentially get to trend mode. So all of a sudden, we are flipping from this sideways trend to a more positive trend on the upside. Let's go to the weekly chart so we can see just a little bit more. And this, we noticed this yesterday in the live room. I may have talked about it yesterday, but all of a sudden we're getting these upward Fibonacci targets. These are the Wavetech Fib targets up here. Last time we had those over here, we were looking at 41.68, 43.70, and we got up to the 43.27 level. So we came in between Fib target 1 and 2. Right now, this is pretty crazy numbers here. We're looking at the level of 41.90 is the minimum target on a weekly chart. And if you look at the algos, I was talking several weeks ago, you may recall, when we were down here at the 36 handle. And also, I mentioned last week that 37.50 was a really big support number. We printed 37.38, just through it earlier this week, and then we got this monster reversal. But we're basically staying above the 200-week moving average. But the algos are suggesting possibility of next week being flat to down, and then we start to see a potential increase in the values. But I think we're going to have some challenges. 40-week, 200-day. I'm not ready to throw it all in, but the database is going to help a lot when we get this intermediate database to figure out if we're getting enough traction to push this thing higher. And higher may be just a retracement value, and I'll come up with that on Monday. I'll try to come up on the weekly setup, and that's exactly what's going on from the pattern standpoint. All right, let's start with the weekly. We'll go weekly first on the NASDAQ. And I noticed somebody said some caffeine, decaf. Listen, yeah, that's a problem with me being fresh in the morning. So anyway, appreciate the comment. So we're looking at the same patterns here. Looks like potential flattening just a little bit next week. We're trading right now on a weekly basis. We're trading at RTX is 11,728. So 11,777 was the high. So we're printing pretty much right at the highs of the week that were projected earlier. So as next week we get a little flattening and then some more rallies, and the Fib target 1 weekly NASDAQ is 13,137. Okay, so that's the pattern there. Let's go over to the dailies, and daily you can see we're also looking like the same thing. We got RTX sell signal, 2 days sideways. S1, as I mentioned earlier, S1 is 11,513. We've had a low of 11,569, so we're just about there. If we get through that number, then look for an expansion on today down. It's a big number, 11,380. It's like 100 and some points down on the NASDAQ. I suspect, like I said, that we're probably going to get a sideways range. S1 would represent the minimum target coming into the RTX sell, which just says, basically, when I say RTX sell, it just indicates that we get a slight downside. Sometimes we've seen the RTX sells end up being major. I don't think that's the case this time. Everything's telling us that we're likely to see some further improvement, that the prices are going to have to hold together. The absolute minimum on all of this stuff is you're going to have to stay above the 10-day moving average, which here is 11,115. So 11,115. Same thing on the S&P. Simple 10. You got to hold above that. There should be no issue as well. We should see this just continue on. All right, so we'll take a look at the Russell. I discussed this a bit, but look at the weekly patterns on, this is the daily patterns on the Russell. We've got fib targets right now up here at 1990. I discussed this yesterday. We got that monster reversal yesterday right off of the 40-day moving average. That was 1757 was the 40, low 1763. I believe we were had traded down over that overnight, and what a huge reversal this was. We're getting follow through on the Russell. As I mentioned when we were just looking at the algos just a few minutes ago on the hourly charts, they have a much stronger profile than the S&P or the NASDAQ does, at least for the next 2 to 3 hours. So upside objectives, like I said, 1990, we're trading above the 200-day moving average. Looks like everything's in good shape there. Let's go over to the weekly, and I'll just, so we have weekly minimum high target 1, 2036. The algos, we're looking at everything being really positive here. What will happen, I should say, the market grid's going to turn up on all of these markets for when we come into next week. So we're going to start to set up a potential. You'll see this where my cursor is here, this upward channel. We have a shot at setting an upward channel. In fact, this what I'm about to draw is actually going to be relevant to all of the indexes. Let me just bring this up here so I can get this. But this is what's likely to happen: is these market grids turn up, and then what we get is a channel that gets us up to these into these Fibonacci, just like what we had over here. So we had this channel here, and these market grids get into these little channels, and this here is what I call a bubble bottom, and we had a bubble bottom on all of them. Those are typically a low, and then of course all of the PPMs here are breaking above their first, second derivatives. Even on the 200 is turning up as well. So it's a substantial situation that's happening here on these markets. And I guess for expectations, like I said, over the next several weeks, probably coming into we're going to go for 3 to 4 weeks. There's a pretty strong chance that we get follow through, but there's going to be some critical things that we're going to see as we go through next week. All right, let's cover the interest rates, even though we're not open. Let's take this was a pretty, I want to blow this up. And one of the things that I was talking about yesterday was that we should hold this 10-period moving average. Well, this is very interesting, I think, folks. And we got into this fairly deep in the live trading room yesterday, is what happens is we are now closing the 10-period moving average is 383.6. We're trading there on the overnight, but basically we close below it. There's not going to be another print on this chart. This is the weekly close we're looking at. And what you're seeing here is all of a sudden the algos are suggesting that the 10-period moving average is going to get into trend mode down. Now, this is weekly. That's quite the statement I'm making right now. What that's suggesting is that we could run into around 350 or so on the downside. I'm going to throw a monthly chart up here just so we get some expectations on the market grid. But we're looking at 370, 375, and below that number, it gets crazy down to 350. We got into this conversation yesterday in the live room, and it just seemed ridiculous to be saying these things out loud. And especially with the big dilemma on the markets right now is that folks are expecting that the Fed is going to raise another half a point. There's actually supposedly some dilemma out there about 50 or 75. It's going to be 50. It's not going to be 25. I don't believe. If they go 25, then you guys know what that means. It's going to be that would be the pivot. Just by that would be it. That's all the market participants and the algos and everybody's going to need. So there's a setup here. Just looking at how these rates are being structured, is that we could see another quarter percent down. That would put us into 360, 375. I don't think they stay there long, but they could print down there, and that print in itself would be a crazy print for a lot of folks when it comes to equity markets. And what we've seen all year is we've been beating up the 60-40 guys all year. They're getting a little reprieve here where the bond market's starting to act pretty good, and the market's going, all of a sudden that gap is changing, but they got a long ways to catch up, as they're down for a while now. It's a pretty big number, but they're at least going to argue their case. They always do, that this was a good thing. But that's the dynamics of the market is seeing that, and that's going to help market sentiment. That's going to make everything feel differently. So not a lot we can go through here. Like I said, the market's closed. We probably needed this bond market open today more than ever, just to set up this weekly close. So markets are going to operate without that. They're going to have, looking in the rear view mirror, looking at these numbers here at this 383 print, wondering, is it really 383 or is it going to bounce back over the four handle? What's going to happen? Nobody knows. Unfortunately, we don't have the market. I suspect if we were trading, we'd be back around my 392 low that I was talking about, or probably would be somewhere around 392, maybe 395 if we were trading today. I think there'd be a bit of a pullback. I think some folks would be pretty excited too if they did manage to buy the bonds when we were at 430 plus. That would have been a really good time to buy them, a good time to sell them here, take profits on that. But the point is, I think we're going to operate without them today. It is what it is, and I think that sets the market tone for today. Probably more, I think it stabilizes and stays in a reasonable range. I don't think we get out of control because we don't have this input, and this is in my opinion, for the moment, the biggest input we needed for today. So not having that there is significant. All right, next we'll take a look at crude oil. And Crude is continuing to basically set up this pattern. We're rising right along the 10-period moving average. Algos are suggesting, though, that we're going to see the potential rollover of the 10-period moving average. We could head back toward a 75 handle on crude. And I did see a little story that came across when I was reviewing some things this morning, that the Saudis are talking about cutting oil production again. So very interesting. So there is a floor in this market, and I think we're likely to see that maybe we get a 70 handle. I've been arguing we can't, but I'm still kind of sticking to 82, 92 range, but the potential of getting down below this. The algos on this a weekly chart. Actually, this is the monthly chart that I have up here, and it's suggesting that we're going to be under pressure here for a while. I'm going to throw up the weekly. I'll go full screen. As weeklies are suggesting more stable for the short term, and ultimate 72, 75 would be down on, would be the maximum downside. And the algos are just still saying that we're going to be locked in a trading range. So I'm going to stick with my 82, 92 range, extreme down to 75 on the upside, 98, probably call it at the buck at 100. From that standpoint, that's probably the maximum extremes, but the expected is 82, 92 with potential 77, 75 print in here. And if the Saudis do actually cut rates and OPEC starts to get together, they want to maintain this price. They've still got good demand, and the whole blocking of the Russian oil didn't work out well at all. Actually, didn't do anything. But the point is that we're now at this phase where we're starting to see there's going to be more demand. Are they going to fill the SPR back up? What are they going to do there? And there's a lot going on from in the energy sector, as always, right? And there's some actually some new regulations I saw also coming in to a lot of the U.S. folks, and looking at flaring and leaks and all that stuff, which I think is a good thing, actually, that they do need to tighten that up. There's just a lot of waste out there, and there always has been. I always wonder why they're burning fuel, when you see the flares at the refinery companies and factories and all that facilities. So anyway, I think that, like I said, we'll probably have this 82, 92 range going. All right, gold is next. Man, I'm loving gold. This is the weekly. If you recall, going back about 2 weeks ago, I told you the algos were predicting a huge move to the upside on gold. And this is beyond my best expectations, actually. I thought we could maybe print into 1720. At the time, we were printing 1620s at the lows. If we look at the low last week, it was 1618. So here we are, $150 higher. Gold just exploded. It was absolutely spot on. Next level is 1800, roughly 1810. This looks like we're going to continue to see a pretty decent market. Probably the support levels are going to be around that 1725, 1710 are going to be your downside supports from that standpoint. This is a weekly graph. Let's throw the daily up here, and you'll see daily we're almost up to the 200-day, which is equal to about the 40-week. We're not quite there. The algos are suggesting we stay in this uptrend. I think we probably maybe print toward that upward number here. That's would be a big rally, actually, up to around 1775 or so. But most likely, we set up a little bit of a consolidation, and we stay above these moving averages. Once the moving averages catch up with the action, then we probably will be the pause that'll be necessary to set up the next move up. And it does look like there is going to be one. All right, so we'll do Bitcoin. Got the daily chart here. I'm sorry, it didn't update. 1 second here. Here we go. Sorry about that. So we did get this big drop that was being projected. The algos are suggesting consolidation, and this is something I want to talk about, and especially with all of you that are using the market grid and have these indicators, this is what, when you get this is called a volatility spike. It's similar to like Bollinger Bands when they get those big bubbles, when they get way spread out. Well, this adjusts much quicker than Bollinger. This is not a standard deviation, but a actual volatility measure that is being calculated. And so what's going to happen is it's going to consolidate. We're going to see the market grid start to come in. We should get a consolidation. The algos are telling us the same thing. We stay sideways for right now. There's a little bit of upside, but not a lot. We're looking at probably around 18.5. Remember those numbers I was talking about, 18.200, 18.555? Those are going to be the absolute top end of this range, and we're going to have to consolidate here. We go over to the weekly chart, and this is where things get very interesting. And I think I picked the wrong exchange here. Let me change this exchange here, because yeah, I'm not getting the algos to calculate. But as I showed you the other day, I've got the wrong exchange up here. But the point is that the algos are still suggesting that there's massive downtrend that's formed here. The PPM1 is now at a minus 1.51, it's still got a resistance right here at these levels here at 19,592, and that number is dropping. Of course, we're trading right now in the 17 handle, so 17,019. So could be an interesting weekend, especially with all this FTX news out there and all of that. So I'll come back up on screen. We've got about a little more than 20 minutes to go. So there's something I would tell you right now, the crypto markets, doing the technicals, even talking about what's going on there is way above my pay grade. I don't know that much about crypto, so I've been covering it on a technical basis, so I'm not going to act like I'm some kind of expert in what's going on with the FTX situation. This is a very big issue that's going on, which I don't have a lot of knowledge of, so I'm not going to touch on that. So let's talk about what I want to do next. I actually set this up for yesterday, but I thought it would be interesting, and I've been wanting to do this, and I'm going to go more in depth. I'm going to get potentially, if I can get some time, I'm going to try to put a more in-depth scenario around this, especially those of you that have the indicators. But I've always wanted to do what I'm going to show you, and I haven't had the ability to and the platform to do it, and TradingView's given me that platform, so it's interesting. I'm going to go through, and just for today, we're just going to do a couple metrics, but we're going to look at CPI, PPI, and we're also going to look at the unemployment rates, and we're going to do a quantitative view on these things, and I think it will be reasonably interesting for you folks. I know I went through a lot of this analysis earlier, actually last night, and I thought it was just fascinating, and that was the reason why I named the video today, is CPI really over? So let's go in and dig into that. So this chart here is the CPI Yes, this is the PPI, and I just want you to see exactly what's going on here. I'm going to go in here and change. Bear with me one second. Oops. I want to change one of the settings here very quickly. Is right now it's looking back 150 periods. I'm going to go to 50 so I can get the algos to look at. And this is interesting here from the standpoint of what's going on. Actually, whatever I did was the coolest thing I've done, I think, ever. We've got the chart and the algos right on top of each other. I'm not even sure how to get out of this at the moment. Yeah, I have no idea what I did, but it looks cool, so we'll stay with it. They're kind of embedded. So the numbers up here at the top are suggesting that the 10-period moving average is at 137 on this index. It looks to me that that trend is going to stay in play. And since this is a monthly trend, we're looking at into first quarter of next year. And I'm just, we may have peaked out, but I don't think so. I think the trend is still intact. I still think that's going to be a thing going forward. I do expect the Fed to do a 50 basis point move, and that I don't see any way out of it. I think I've been saying this along. They're going to keep going until they break something. They haven't broke anything, and the one thing that they're focused the most on is, they claim they have the dual mandate, right? The inflation and employment, and the employment situation is still so good. I don't think they're going to be happy until they start to see that really start to come apart. Now, we saw like Meta lay off, about 12-13% of their employees. We're seeing some big layoffs at some folks, maybe halting of employment at Apple and things of that sort. But it's all in the tech sector. We haven't really seen the secondary things starting to happen. We know that the real estate market is devastated, and there's nothing there from the standpoint of what's likely to go on in the near future, even if rates pulled back a half or the numbers that we talked about, like 50 basis points. Is that going to make a difference in a 7% mortgage versus a 6.25 or 6.5? Probably not. There's still a lot of things going on there. I think the housing market got a little overdone. It appears that one of the, just talking about the CPI and all these things, that the one narrative that they're keeping out there is services and rents, right? So we went through the commodities yesterday. We saw all the grains, and a lot of this stuff has backed up pretty substantially, but it's starting to stabilize at a higher level. That was my scenario that I talked about yesterday, is that we're going to get this stabilization of all prices at a higher level. So it's notching up, and the question is that something that continues to notch as we go forward, and does it become more material? I don't, I've heard people say they don't believe there's a lot of wage pressures out there. I think there's more than are being acknowledged, and I think they are starting to show up. And I know, like I said the other day, it's almost impossible to give somebody a raise and then back them up, and say, oh, wait a minute, that was just temporary because of inflation. It's better now, so I'm not going to pay you that much. No, I'm going to find another job. And so everybody knows that utility bills, once they raise rates, they never back them up. They never go backwards. And I told you about that little cartoon that I used to have with on my little cork board back in the 80s. And it had a guy in the post office. He wanted to buy futures on postal stamps because they only went up. He knew he would win. And they don't go down once a lot of these prices. So there are a lot of things being embedded. And I think this trend is concerning. So I might have to set up a whole nother chart here. I'm not sure. Oh, wait. Okay, I'm kind of seeing what's going on here. Yeah, I'm not gonna recover from this because I accidentally clicked something And I know all you TradingView guys are thinking, just right click, do this. I'm just going to, I'm going to, since I do have this, I'm going to bring up one other chart here. Let's see how this looks. And I'm going to bring up the, if I can get this to work. Yeah, it's not with everything embedded. It's not working out, folks. Let me set up a new chart. I am sorry. So of course it's going to do that to me. All right, hang on. All right, so at least we can do it. We can do it from this viewpoint. This will give me. So this is the PPI. Still, you can see this upward trend. This is what I wanted to show you. So we'll just go with this chart here. Is that it looks to me that this PPM1 is going to stabilize here, not get above this level. I think this might be how I messed up last time. But let me change this real quick to 50, just so we can get a calculation on this. Yeah, so this was what the algos are showing. I won't set up all the algos, but they are suggesting that we're going to decline, but I think they're still going to be positive. So if you folks understand the whole concept of the PPMs, even though the algo is showing that it's declining, it doesn't mean the price is declining. It says the momentum is declining. And what that means is the momentum is going to stay above trend level. So now the value that we have at 137 on this index is going to be pretty substantial. And if I can get to the patterns here, we're looking at the 140. So there's not a lot of downside on this PPI. So I suspect when we come into December's numbers, when we look back on this month and beyond, we're going to stay above that trend. And maybe it pulls back a little bit, but I think we still have some stronger ability to stay on that trend and at least stabilize up at these levels, which everybody's talking about stabilizing more at a 5 or 6 level, not at the levels where we're at. And I think that's substantial. So let's look at one more chart here. We got about 7 minutes to go. And let's look at the unemployment rate. And I think this is very interesting, folks, because what I'm seeing here, it was interesting that this high pivot level back in 2020 set up, but this is what looks like is going to happen. The algos are suggesting that we're going to get above the 10-period moving average on the unemployment rate. That's going to be 366. So we should start to see it increase. And I think ultimately we probably get to maybe 4%, 4.2 before we start to see this thing go. This is a monthly chart. So this is being projected out that 3 months. So we'll call it Q1, Q2 is going to see some employment start to uptick. And it doesn't look like to me that it's going to be super material. And this 21, this 4.5 is going to be an absolute peak. So we are going to see an increase as we come into next year of unemployment. So make sure you keep your savings money going and don't spend the money. But I think the point is that we are going to see an increase, and it's interesting because I've been trying to study this with little time I've had to really get through it. But it does recognize the trends pretty good. I've been wanting to do this for a very long time. Of course, we get this big spike in basically in volatility here from that standpoint. So, but those are some things I want to talk. I said I was going to talk more on a macro level, and so we did that. We got about 5 minutes to go, and I will basically summarize. I think what we're looking at here. So, looking back at ES, we're back 23 handles. So we bounced off of S1 basically, and I think we're going to stay in this range. Let's see if we can print. But I say R1 was in a 92 handle, so we're back to R1. So we're definitely seeing still some buying here. I had, as I was going through everything, you can see the big spike in there was a big volatility spike here, and now here we are printing up at the higher end of the range for the session. So lots of volatility, still a bit out there. I guess folks saw those low numbers, and they're still covering up a lot of these trades. I think there is, as I tried to point out earlier in the session here, is that I do believe there's some reason for optimism. I do think we're going to see some pretty decent numbers come out of our database on a weekly basis tonight. I'm anxious to see that. I'll throw something out on Twitter for those of you following me on Twitter, and just make sure the Twitter handle is expert with no E. So XPERT. So Twitter @expert, and there's no E in the expert. But yeah, so I'll put those numbers out. I threw them out last night. I'm going to try to get some of those things out when the run happens every night, so you can at least have a handle on that stuff, those of you that watch the channel all the time. So anyway, folks, this is going to, just looking at a couple things here, comments that you made. I think the Dow Jones is going to stay red. I'm not sure. I haven't traded the Dow Jones in like 30 years. It's up here on the screen. People follow it, but I don't really have, I don't look at it at all. So I don't have a good opinion. I apologize. Yeah, somebody look at all job cuts, no wage increases. Yeah, that's true. But there've been some pretty decent wage increases coming in on other industries, and the job cuts that you're probably referring to is maybe in Meta and stuff like that. But there have been some raises, maybe not enough to cover inflation, but they're not going to go back down, I guess is what I'm saying. So let's see here, just another question or two, and we'll call it quits here. Yeah. So anyway, I think that'll probably do it. I'm probably not going to go on the decaf anytime soon. Anybody knows I'd bring up my my Runa. It's gotten very expensive. It's almost $5 a can. They're gouging all of us Runa freaks out there. It's a iced tea with no carbonation and no sugar. Anyway, lots of caffeine. Anyway, folks, thank you. This has been a great week. I really appreciate everybody showing up. Like I said, I'm going to stick with this format. I lost probably a couple thousand viewers plus a day. I'm okay with it. I think this is a much better format for everybody, and hopefully this gets you set up for the rest of the day, and we'll see how everything plays out. But I think, like I said, looking at really just a choppy day, and we're seeing just that right now. So we're back up 0.69 on the S&P, NASDAQ up 1%, and then the Russell now up 1.67. So certainly plenty of buy out there. That residual bullishness is still out there. And like I said, overall, I do expect to see us moving higher over the next several weeks for sure. Anyway, folks, have a great weekend. I will talk to you on Monday morning on the Open. See you then.